So hello and welcome to our third event of the VIRTEU Roundtable Discussion Series. I'm Dr. Costantino Grasso, and in my capacity as Principal Investigator of VIRTEU, which is a new funded project aiming at exploring the interconnections between fraudulent and corrupt practices in the area of taxation, I have the honor to welcome you and open today's session entitled Whistleblowing, Reporting and Auditing in the Area of Taxation. So first of all, please allow me to thank our distinguished guests, Professor Jonas Heese, Mary Inman, and Charles Middleton, who are internationally renowned experts in the area of whistleblowing. It's a real honor to have you with us. Thank you also to our project expert in the area of tax compliance, Dr. Elaine Doyle, for participating in the discussion. I would also like to give a special thank you to the chair of the roundtable session, our amazing special advisor, Professor Diane Ring, to all the other members of the VIRTEU research team, Dr. Lorenzo Pasculli, Mary Laird, and Ingin Erken, and to Professor Umut Turksen, who is professor of the Center for Financial Corporate Integrity of Coventry University and member of the VIRTEU Advisory Board. Last but not least, I would like to thank all the members of the audience who have decided to stay with us today and be part of this fascinating discussion. I will now give the floor to Professor Umut Turksen, who will offer the institutional opening of this session. Umut, the floor is yours.
So I would like to start by thanking everyone who's participating, particularly those making time for us in the European time zone, which is now 5:30, beyond our working hours. So thank you for making such time where you would normally be with your families and loved ones and socializing and all that. So thank you for that. Just a few words about our center, which I'd like to introduce. I think Costa has already said who I am. We are relatively a new research center, established 2018, February of that year. And from the moment we kind of started it, we started running, with projects, and we're interdisciplinary, very pragmatic and impact-focused research center. We don't do that many theoretical work, although all our work is informed by theory. We would like to apply that knowledge into practice, whatever that might be. And in the cluster that I am leading, low risk and compliance cluster, we deal with a lot of issues around societal security, corporate integrity. We started with a handful of academics. Now we are 37. And we, again, started with a small postgraduate or PhD community, which is now running into its 60+ PGRs, we call them, postgraduate researchers. So we've grown very fast. So we need to mention that. We don't just aspire, but we are a world-leading center in a number of subject areas, including research or criminal aspects of research on tax crimes, tax offenses, and then related topics like corruption and whistleblowing and human factors within it. Our funding doesn't just come from the university. As I said, from the moment the word go, we managed to get funding behind our research, and some of our main funders are in this slide. A project that I am running, coordinating, along with my colleague who's going to speak next, Dr. Vaso. We have this European funded project, ProTax. We very much concentrate on prosecution of tax crimes and looking at methods by which we can improve the work of authorities, but at the same time deal with more holistic issues like whistleblower protection, enablers' roles, and also building trust between the government, the state, and the taxpayers. And then we are entering into the final stages of this ProTax project. We've lined up very successfully another major project, which will start almost back to back when the ProTax project finishes, and that is Trace. This is a lot larger, a bigger project in terms of the partners in the consortium and also its value. It's a major €7 million project, which is again interdisciplinary. We have technical partners. They will develop the artificial intelligence technologies, which we will then apply into different crime scenarios, one of which is also tax offenses. So these are the main kind of objectives of the project TRACE. And then these are some of the organizations that we've been working with, which I think shows how practical and impactful focus we have. And also with some of the universities around the world, we've been collaborating and doing work. I think I should have included a lot more. Tax Justice Network is now a partner with us in the projects, alongside with other research institutes like VISES in Vienna, and etc. I think I will stop there. Thank you. If you have any questions about the center, I'm more than happy to answer it.
Thank you very much, Umut, for this interesting presentation. I will now give the floor to Dr. Donato Vozza, who is a research associate at the Center for Financial and Corporate Integrity of Coventry University, and who will offer a theoretical introduction to the topics that will be covered during the roundtable. Donato, the floor is yours.
Dear ladies and gentlemen, distinguished guests, it's my pleasure and honor to be with you here today. Let me thank Professor Diane Ring, Dr. Costantino Grasso, and Dr. Lorenzo Pasculli for having organized such international roundtables. To build a bridge between your research on tax crimes and corruption, Dr. Grasso has kindly invited me as a researcher of the PROTAX project to introduce this event on whistleblowing, reporting, and auditing in the area of taxation, raising a real multitude of big questions. My challenging task should be to provide a foundation for this matter in a few minutes. As already clarified, VIRTEU is a high-profile legal research project firstly focused on VAT fraud in the EU, which is a widespread phenomenon negatively affecting significant resources for the EU and its member states. These frauds are blows to the heart of the EU's financial interests and sustainable development within the 27 member states. These pose relevant questions about the need to foster common policies, investigations, and cooperation in the full respect of fundamental rights. Many responses have been developed over time to implement new policies, reduce institutional vulnerabilities, enhance information sharing, and improve interagency cooperation. There are also successful cases of detection and investigation of VAT fraud and recovery of dirty money. However, it is likely to consider, in light of the current VAT gap at the EU level, also generated in part by fraud and other existing unsuccessful cases, that tax administration and law enforcement agencies cannot detect and investigate alone these criminal offenses. Indeed, the fraudulent schemes set up in the EU context by fraudsters are very sophisticated and widespread. Moreover, when public authorities discover these cheats, it is often too late to identify and prosecute criminals or recover the VAT tax. Based on this background, the first topic that VIRTEU research is exploring is the need to enhance VAT fraud reports in the EU. A key question is whether and to which level reporting, auditing, and whistleblowing could encourage the detection of these fraud cases. VIRTEU, like also PROTAX, are exploring these different scenarios. For instance, transnational serious VAT fraud are often perpetrated by organized criminal networks, which set up fraud schemes involving a string of buffer companies and missing traders, often with frontmen and without staff to evade taxes. They take advantage of the fact that it is legitimate not to charge VAT on cross-border transactions in the EU. In cases where criminal networks play a decisive role in perpetrating the offenses, it seems conceivable that a potential role could be played by the so-called criminal turncoat that expose crime. From this perspective, it is interesting to reflect on the importance to encourage, in any case, exposition of a crime through incentives. Simultaneously, several issues about reporting are posed in the case where professionals have a relevant role in developing these sophisticated fraudulent schemes. Sometimes a business could play a more incisive role in supporting the detection of these crimes through reporting. Many companies may unconsciously be included in the chain of traders as a part of the criminal master plan. In this case, the main issues concern the role of due diligence to avoid the potential third-party liability and reporting to public authorities the attempt of this third party to perpetrate a VAT fraud. In other scenarios, VAT fraud can also be perpetrated by companies and could involve even the financial bank system, This is, for instance, the case of the big scandal of the multi-million EU carbon market fraud. From this perspective, there is a strict interconnection between this fraud and compliance and also reporting. But VIRTEU has a further relevant goal, to exploring whistleblowing, reporting, and auditing in the broad area of taxation within EU. Therefore, it is an ambitious project aimed at looking at a broader objective. On one side, the discussion is currently focused on various topics related to tax evasion in the EU member states. For instance, the importance of a diffuse report system for detecting tax evasion and the issue of anonymous reports, the lack of laws protecting whistleblowers in different EU member states, the topic of the cooperative tax compliance as a mechanism aimed at fostering the self-disclosure of cases to tax administrations, and the role of internal and external auditors in detecting tax evasion perpetrated by executive of large companies, and the risks of conflicts of interest connected to this relationship. On the other side, the research is also looking to tax avoidance. From this perspective, attention is paid to the LuxLeaks case, where reporting person, for example, disclosed practices, tax rulings in compliance with law, but against the spirit of law. This case raised the awareness about the essential role of whistleblowers as formal gatekeepers of the society, who were also exposed to criminal proceedings. One of the reporting persons who acted in good faith in this case has been convicted and is applied to the European Court of Human Rights for the violation of his freedom of expression. This leaves open fundamental issues concerning the recognition of whistleblower protection. The problems are manifold and move, among other things, between ethics and legality. The LuxLeaks case also led to an important evolution of the legal framework at EU level. Following this case, the EU institutions introduced the Whistleblowing Directive, which will have to be transposed by the member states and promote breach to EU laws. These issues will be analyzed in a very high-level book edited by Dr. Grasso on whistleblowers' voices of justice that will soon be published on Springer International. The directive represents a fundamental step at the EU level towards the common protection of whistleblowers. However, significant issues remain open. Let me give just a few examples at this time. First, the protection is limited to fraud against the EU's financial interests, in particular transnational serious VAT fraud above 10 million euros, and specific breach of corporate tax rules. Therefore, it does not cover the whole area of taxation. How will the member states proceed with the matters outside the scope of the directive in tax matter? A further issue concerns the lack of legal provisions recognizing rewards for whistleblowers disclosing tax fraud. It is a missing essential incentive. Why? What could be the solutions based on foreign experience? Moreover, it will be interesting to understand in what terms this directive will be implemented by member states, with reference, for instance, to the relationships between internal and external channels and public disclosure, the relationship between whistleblower protection and criminal procedure, and so on. There is a lot of work ahead for academics, policymakers, enforcement agencies, and judges. And with its interpretations of EU law, we expect that the European Court of Justice to be the formal guardian of whistleblowers' protection and their fundamental rights in the future. Considering all these aspects to explore in our projects, I would like to welcome any reflections and suggestions supporting this to create a potential solution to identify issues. We will have the unique opportunity to hear about these topics from high-level experts, outstanding academics, and professionals from UK, US, and EU, and use the Q&A session to raise further questions. So, carpe diem. That brings us to the end of this introduction. I want to thank you very much for your time and attention.
Thank you very much, Donato, for such a comprehensive introduction to the topic. I agree with you, and I think it was crucial to highlight the importance of a diffuse reporting system and of the anonymous reports, the role of internal and external auditors in large companies, and the risk of conflicts of interest. And last but not least, the fundamental importance of whistleblowers, the current disharmonization and the lack of protection. I will now give the floor to Charles Middleton, who is an international tax lawyer and whistleblower, and who will offer a brief speech putting our roundtable in context to the provision of valuable perspectives from practice. Charlie, the floor is yours.
I am a whistleblower. I'm now a whistleblower advocate, but I was formerly a senior tax officer at General Electric Company. I was a senior tax guy at Caterpillar and a senior tax guy at Walmart, and then a large private company that's called Oxbow, that's owned by one of the Koch brothers. So I've spent my career at the highest levels of tax planning, tax compliance in the world, US mostly, but a lot of international activity. While I was there, I saw various levels of compliance and cheating. And obviously there's a spectrum between the outright criminal fraud and sophisticated dishonesty with the help of accountants and lawyers. So my experience is more on the sophisticated dishonesty side of the picture. When a company does business in two countries, America and England, say, and their blended tax rate is say 25%, but the company's overall tax rate is 3%, something is up, right? And that something is the abusive use of tax havens. My experience was that I saw things that bothered me, and I raised them internally. I never went external until I was retaliated against. I see a pattern of, if someone raises issues internally, depending on the magnitude of the issue, if the issue is someone stealing from the company, the obvious response is attaboy, right? But if the issue is the company is cheating on their taxes, the company is cheating on their SEC reporting, etc., then the lawyers circle the wagons and try to protect the organization, and that frequently results in a bogus investigation where the company is found to have done nothing wrong, followed by an attack completely unrelated, but just happens like 3 weeks later, against the whistleblower. And then the whistleblower is fired for cause for some trumped up thing, and the whistleblower has the choice of fight the company or take the money, right? And so they have a tendency to offer you money to go away, and they ask you to sign an NDA. I may or may not have signed NDAs. I can't tell you, right? Because NDAs prohibit you from talking about NDAs. It's like Fight Club. This sort of effort to silence people who are telling the truth about things that are going wrong is extraordinarily effective, right? There is a lot of fraud in the world. We don't have to think hard about whether that's true or not. I mean, look at the frauds that come out every year in and a year out, Wirecard, VW, et cetera, and look at the fines that are paid every year by big banks and others, right? We know there's a lot of fraud. We also know that whistleblowers are the number one way that fraud is revealed, right? The ACFE did a study which said that 43% of the frauds that come to light as a result of whistleblower activity. The numbers for internal and external auditors are less than 5%, right? The people who are supposed to be looking for it and don't already know where it is, don't find it, either because of willful blindness or because they're not good at their job. It's my opinion that they're good at their job, right? They find reasons not to disclose it. They resign rather than disclose it, or they get an opinion from the lawyers that says it's all okay, despite I think Wirecard is a great example. How could they possibly have gotten comfortable that it was okay when they were missing almost $2 billion in cash? 1MBD is a better example. How can they possibly, the external auditors, have gotten okay when in a $5 billion portfolio, it had almost no legitimate investments? It invested in a movie that made money. Other than that, it was all fraud. Yet multiple Big Four accounting firms said everything's cool. And so and Goldman and law firms, et cetera. So fraud is a problem. Whistleblowers are the solution, and whistleblowers are beaten up. So the question is, how do you get whistleblowers to talk? And I got to tell you that one of the things I was asked to address is, what does it feel like to be a whistleblower? And I got to tell you that it's lonely and it's scary. I'm friends with a couple of people who engaged in litigation with their former employers over whistleblowing issues, and their former employers have large legal teams, and they are willing to fight as long as you have money to fight them. right? There's significant animus against whistleblowers, notwithstanding the recent, everybody says they love whistleblowers. Not if you look at what they do. If you look at what they say, absolutely. But if you look at what they do, it's not so much, right? Management is willing to spend as much of the company's money as it takes to crush the whistleblowers. It's an agency risk problem. So let me. One of the other things which I was asked to talk about is tax audits. Why are the taxing authorities less effective in finding tax fraud? And I got to tell you, the reason is because it's very difficult to be a tax auditor. If you go into a company and you don't understand the company, and you're supposed to understand it well enough to challenge the people who are smart and hardworking and well paid, and tell them, no, the things they're telling you aren't true. You're going to tell them, how they should have complied with the law. I mean, think about when you've gone to a company. How long did it take you before you felt confident knowing what was going on? 6 months, a year, 2 years, right? It takes a long time to understand a complex organization. And if you go in as the tax auditor, you're being gaslit, right? The people in the company are systematically feeding you untrue statements. So it is very difficult to perform an effective tax audit of a sophisticated taxpayer that is trying to bamboozle you. There's literally only one way you can do it, with the help of an insider. And people want to tell the truth. You just have to create the right incentives and lack of disincentives. So, I've talked to whistleblowers who basically have said, my life is over. I have been crushed, right? And they haven't lost yet. It's a very difficult fight. It's a very difficult place to be in. Your friends are part of the company. Your social relationships, people have to choose sides. It's like a divorce, and everybody else, loves your wife. So one of the other things, an exception to NDAs is you can talk about things that are in the public knowledge. So I was a senior officer at Walmart, and one of the things that happened when I was there was I discovered some non-compliance, and I brought it to the attention of my bosses, and I got a very strange response. I expected the response to be, okay, good, let's fix that. But the response I got was, don't look at that. Don't deal with that. Go look at this other thing. Do anything else but that. And it took me many years to figure out what was up. Well, it turned out that I was looking at tax planning for Mexico, and Walmart had been told by a whistleblower that there was an organized bribery campaign in Mexico to open stores, and they did not want more attention put on Mexico when they were already hiding from the SEC this bribery scandal. So the bribery scandal was unearthed in 2005 by a whistleblower. Walmart waited until 2012 to disclose it to the SEC because they thought the statute of limitations will have run by then. And they finally settled with the SEC in 2019, at which point they disclosed that not only were they paying a $300 million fine to the government, but they had paid almost $1 billion to their law firm and to the law firm of 30 officers to defend them for lying to the SEC on the Sarbanes disclosures, right? The Sarbanes disclosures just don't work. The voluntary compliance system just isn't working, right? You can be very sophisticated in the way that you write these disclosures so that you technically disclosed it. If you knew where the issue was, you disclosed it. If you didn't know what the issue was, you don't have a clue, right? If you list a list of 10 risks, and the real one is one of them, and it's said in generic terms, that's not a real disclosure, right? We might get hit by lightning. We might be engaged in conduct in foreign jurisdictions that may violate the law, right? Translation, the first part, nonsense. The second part, we're paying bribes, right? So I think we've done the experiment on self-regulation. It doesn't work, right? We need whistleblowers, and the only way we're going to get whistleblowers is if the whistleblowers aren't crushed. I think that the best method is to actively encourage people to blow the whistle, provide rewards. If you provide rewards, the whistleblowers will come forward and fraud will decline. And that's a virtuous circle. It's not like everyone's going to get rich on being a whistleblower. It's going to work for 5 or 10 years, and then people are just going to stop committing as much fraud because it won't be profitable. I have one more thing on my soapbox, and that is the business model of tax planning. Right, so I talked before about this, the hypothetical company which does business in England and America, and you know, the blended rate's 25%, but their rate's 3%. So how does that work? Well, with a tax haven. So and that tax haven could be Switzerland, Luxembourg, you know, Bahamas, and you know, so you've got the CFO doesn't come up with this grand sophisticated structure. You know, what happens is somebody pitches him the idea. And that somebody is the most effective competitor in the tax planning space right now, which is the Big Four. The Big Four learns on their dime how a company operates, and then they pitch a tax planning idea. And they say, this tax planning idea will cost you, you know, $500,000 to execute, and it'll save you $10 million the first year and $10 million forever after that. That's a pretty good value proposition. That's an easy sell, right? If it works. And so what you have is kind of this race to the bottom. Everybody's dreaming up, you know, better and better schemes, and the IRS is outgunned. You know, they come in and they get a transfer pricing report from a PhD in economics that says that yes, actually that we made all of our money in Bahamas. Go figure. You know, and they don't. The IRS has learned they can't fight. They lose. So I mean, whistleblowers are their only chance at winning those fights against sophisticated taxpayers, and for whatever reason, there's a institutional hostility towards whistleblowers, such that they don't use them. Right? They will reluctantly, you know, listen to some whistleblowers, but they have never used the provision in the law that says that the IRS audit team can talk to the whistleblower. Instead, what they have is several layers of bureaucracy. The whistleblower talks to the whistleblower office. The whistleblower office talks to the liaison. The liaison talks to the, you know, a large business and international. A large business and international talks to the audit team. Well, you know, when you're playing, you know, Chinese whatever telephone, right? Something's lost in translation, and so it reduces dramatically the effectiveness of the whistleblower program. You know, the whistleblower program collects, you know, 200, 300, 400 million, sometimes $1 billion, but the annual tax gap is more like 400 or 500 billion every year. So the program is not being effective, and it's not being effective because it's not using the most effective tool it has at its disposal.
Thank you very much, Charlie. It has been a fascinating presentation and surely the best way to start a roundtable. I'm now delighted to give the floor to our special advisor, Professor Diane Ring, who is Associate Dean of Faculty, Professor of Law, and the Dr. Thomas Carney Distinguished Scholar at Boston College Law. Professor Diane Ring will be the chair of our roundtable session. Thank you very much.
So yes, let's get started. So to begin, I would just like to introduce our roundtable panel. First up on my screen, I have Jonas Heese. He's Associate Professor of Business Administration at Harvard Business School, and his research focuses on corporate misconduct and the roles played by regulators, whistleblowers, the media, and an organization's own compliance systems, all in attempting to prevent misconduct. Then we have with us Mary Inman. She is a lawyer and partner at Constantine Cannon, based both in San Francisco and in London. And she's worked extensively with whistleblowers, and in particular with a focus on sort of the international whistleblower in the American system. Charles Middleton, we've just heard from, so he spoke more eloquently about him than I could, and so he'll be part of our panel. And then Dr. Elaine Doyle, she is Senior Lecturer in Taxation at the University of Limerick, and also a VIRTEU Research Associate in the area of tax compliance, so perfect fit for this panel. And her work generally focuses on professional ethics and risk management in taxation. All right, before we dive in, I just wanted to explain our format. So we're about to start the roundtable portion where the roundtable members I've just introduced will be spending the next 40 minutes or so discussing these issues. At the end of that time, I will ask the recording to be turned off and we will go to our Q&A session for about 30 minutes. For those of you who are listening, if you have questions, I encourage you to signal that in the chat function, maybe even write them down now as you have that question. And then when we come to Q&A, Dr. Grasso will be sort of handling that and letting you know sort of when your time is up to ask a question. And so we'll run that for about 30 minutes with the recording off. Then at the close of the 30 minutes, we'll turn the recording back on and return for our summation. So that is the plan. And so now I'd really like to dive in terms of getting us started. Right, if you've been listening, right, both Donato and Charles, we two big issues coming through, and the first is the formal gatekeepers, the existing framework we in theory have in the law to get compliance, and then the sort of reality of a world of whistleblowers that follows from that. And so, although I think we're going to spend the bulk of the conversation on whistleblowing, whistleblowing programs, et cetera, I did think we should start a little bit first with the formal gatekeeping system, just to get a little bit more of a sense of what that structure is and where it's not working, where it's going wrong, and ultimately how it might intersect with whistleblowing. So I guess I'd start out by just asking the group, how do you think about who are the major sort of gatekeepers, formal gatekeepers that we expect in terms of securing tax compliance, and what are their roles? How do they differ? So anybody who sort of wants to start by jumping in.
Yeah, maybe I could jump in if that's okay with everyone. So I mean, I think I come at this from a business school perspective, and as a tax accountant myself, I worked in the firms, but so not so much from a law perspective. But I think it is important to recognize that we do have those formal structures or kind of gatekeepers to start with for uncovering kind of corruption or fraud or illegal activities. And so we have obviously internal auditors, internal people whose role it is to look at the structures and the governance and so on. Obviously external auditors in the form of, the accountants that go in and sign off on the company's position. And then I guess we have the revenue authorities also that go in and do the actual tax audit. So in some ways, there's lots of different layers around that, even leaving aside individuals within the organization. So they're I suppose, the more formal structures. And where I find it, Charles mentioned complexity. And I think the complexity also comes in for the fact that you have tax advisors working within organizations like Charles was. So you have a good in-depth knowledge of what's going on in an organization and a better overview of the kind of structures they're using. But then often organizations will also use professional advisors. So that adds a whole other layer of complexity. So you've got accountants advising, you've lawyers advising, and you've got tax practitioners advising, whole teams of them working with the internal tax function. And again, where they fall, in some ways, if they see wrongdoing, they're not really formally whistleblowers as such, because they don't work within an organization, either as employees or former employees. And their duty, I guess, being paid a fee, is to their client, who is usually the financial controller of the organization. And they do have a professional responsibility and an ethical responsibility to act in the interests of their client. And they have, I suppose, confidentiality and privacy issues to contend with in that role. So, I think it's interesting to look at that, and maybe they should have a larger responsibility to the broader community and the larger sort of stakeholder community. But in my experience, professional advisors will typically be quite, much more responsible just to their client, which so where they fall within the formal gatekeepers versus the whistleblower sort of community complicates things, I think.
Maybe can I? Oh, sorry, Mary, go ahead. I would just add really quickly that I agree with Elaine's ticking the sort of setting who the gatekeepers are. I think one of the areas that I like to focus on is the role of the big four accounting firms in being quote unquote the gatekeepers. One of the things that I find most disheartening is that you see companies like Disney who've had the same auditors from inception. Right. And so what does that function anymore? Right. I think one of the things we need to get back to is that actually an actual rotating of them, because you become so close, right, that there's not that objectivity that you need. So, I mean, that's just one concrete example to me about how it sort of changed. The role is much more of a friend to the company than an objective auditor.
Yeah, and maybe along the lines, I guess, and building a little bit also on Charles' earlier point and his anecdotes, you know, from a researcher's point of view, the question always is it just an anecdote, and do we hear only the stories of the whistleblowers that suffered a lot, or is there actually something systematic going on? And what I actually did in my research, one of the nice things about this thing called the False Claims Act is you can actually get all of the data and all of the lawsuits that are filed by whistleblowers. So you can collect all of that data and see what is the reason that those people contacted the authorities, that they actually filed a case. And it is precisely what Charles said, and let me be a little bit more precise here. Number one is typically whom do they report the issue to? They talk to their supervisor, management. They rarely use something like a confidential channel, like a hotline or something. There can be many different reasons. Maybe the hotline doesn't work, or they don't even have a hotline, and so forth. And then number two, the big thing is what happens then? The company typically starts to retaliate against the whistleblower. So I think the role of management as a central gatekeeper here in how they're treating whistleblowers is a really important thing. And I think there are basically two types of firms. One set of firms understand that essentially every employee is a risk manager, so it's a great resource to detect problems early on. And then there's another set of companies that really goes after those whistleblowers. And then the question is, how can you protect them? And so what you see is, in terms of the cost that Charles was also referring to, what I find is I get almost 40% of those cases. So I study as a sample of more than 2,000 lawsuits brought by whistleblowers. In almost 40%, they're losing their job. They're unemployed for at least a year. They face significant loss in income, like roughly 10% less over extended periods, like 10 years of time. So it's not like a one-year thing or something. It's really a persistent factor. And I think the last point that I wanted to make is, I think that what Charles said here comes really into play. Then I think we have to think differently about these financial rewards. It's actually not a reward, it's a compensation for the loss that you incur as a whistleblower. It's not that you're a rich man automatically. In fact, what I'm estimating in this panel, the problem is we focus, the public discussion focuses on a few people who get a lot of money, but the average whistleblower doesn't get that much, especially after you deduct the costs for people like Mary's, the lawyers that also want to have their share of this, so for good reasons. And so there is not that much money left at the end.
Before we dive more into the whistleblower thread, Jonas, that you were getting at, I wanted to pick up on something that you had mentioned, but it's also coming from the other comments, which is, the suggestion that there wasn't much the whistleblower could do internally, right? So again, the formal structures really don't seem to be there working. And so to think a little bit more precisely, both about the sort of internal lawyers, the hired lawyers, and then the auditors, right? Those sort of three different groups. How do we strengthen and where have we failed in terms of strengthening their obligation, right? Because they're in place. So nominally, you easily came up with several key touch points in the system of people with some measure of formal duty. It may be to a client, so that may be part of the problem. The client isn't broadly defined. It may be professional ethical responsibility, so lawyers do have some duties beyond their client. And then again, with the auditors and sort of that relationship. So this all reminds me, and Charles, it came up even when you commented, but when Sarbanes-Oxley first was enacted, The reaction that I heard from those inside, major corporations right away was one of tremendous panic and stress. They were pretty sure they were going to be hauled off to jail. And then it quieted down. I went to the same events year after year, met with the same people year after year, and I never heard that again. And so for the moment, they thought it was going to somehow be a stronger constraint on their performance of their job, their duties, their standards, but it didn't seem to play out. And so, if we were looking to sort of at least keep with our formal gatekeepers, don't completely dispense with that and try to have them do more, where do you see sort of possibilities there?
I think that it makes sense to bifurcate, to create two piles. One is the gatekeepers and one is the accomplices. And objectively, realpolitik, who's an accomplice and who is a gatekeeper. So the first person would be the tax manager who prepares the tax return in the case of a tax issue, right? I mean, it prepares the tax return and they prepare the financial statements which prepare the tax expense. And then their boss reviews it, and then internal audit, their company reviews it, and then external audit reviews it. The CFO has to sign off on it for Sarbanes-Oxley. The lawyers have to sign off on it internally and externally. And finally, it gets to the regulators. And the firms that have provided this assistance have a lot of revolving door action with the regulators. So I'm trying to figure out who doesn't fit in the accomplice pile, right? I mean, certainly the people who work for the company are pursuing the company's agenda. Certainly the people who are paid by the company are pursuing the company's agenda. That's the accountants and the lawyers. The regulators, I mean, while they're working for the government, are working for the government, but frequently they came from industry and they go back to industry. So we're all accomplices, right? I mean, what gatekeeper?
That's a great perspective. I mean, we all sort of use that as a framework, and maybe we're simply both asking too much and sort of not seeing the roles as clearly as they are. There's so much I would like to talk about in terms of this, but maybe we'll sort of weave that in now as we transition to talking a little bit more formally about whistleblowers, whistleblower programs. It's come through already with a couple of comments that given the failures of the formal system, I won't use the word gatekeepers, but the formal system that we have in theory to encourage tax compliance, whistleblowers turn out to be a last line of defense. And so, what does, I guess one question would be, what does whistleblowing look like in a tax context? How might that be a little bit different than some of the whistleblowing we might be seeing in other regulatory fields?
Can I jump in there? Is that okay? Yeah, I mean, one of the things I think complicates something like whistleblowing in a tax context is the whole idea of illegality, because I think, you're used to if we even look at definitions of whistleblowing, they'll often include, something that's, wrongdoing, illegal, damaging, and so on. And I think tax is tricky because we all can look at tax crime and tax evasion, and that's quite clearly illegal and not right. But I think the tax avoidance and the fact that there is a range from planning, which is sensible, right up to really artificial and manipulative structures that are deliberately trying to exploit the chasms between different jurisdictions. So there's such a continuum there that at what point, I suppose, does somebody say, well, actually, this is wrong, because the defense is, well, it's not illegal. It might be unethical. And I think that's the difficult path for a whistleblower to put themselves out there when actually the defense is, well, we're not doing anything that's actually illegal. So then does the legislation, I suppose, even cover something like that? I think that certainly, again, with the complexity theme, it's a little bit more complex maybe than something perhaps environmental.
Go ahead, Charlie.
Go ahead. What I was going to say is that in the tax law, there's laws that are not enforced. For example, there's a business purpose judgment, a business purpose rule that says that if you do something for a tax benefit and not for a business purpose, you don't get that tax benefit. But the IRS never wins that, right? Because it's so subjective. And there's anti-abuse rules. You know, many sections of the IRS, you know, tax code, U.S. tax code, have anti-abuse rules that say if you do this thing just to achieve this abusive tax result, you don't get that abusive tax result. But those rules again are not enforced because the IRS finds itself losing. I want to amend my prior thing about who are the gatekeepers. I thought of one person who's gatekeeping. It's Mary.
Well, thanks for that segue. I'm gatekeeping only in the fact that we're vetting cases to figure out which ones we think are, and it's an important role. It's a very important role, right? I have an ethical obligation to only bring cases that I can support. When you asked the question, Diane, what's the difference? What's unique about whistleblowing in the tax space? I would say one thing importantly, and again, I want to broaden this out to more than a US perspective, but and we can talk a lot about that in a minute, but just speaking about the US, the IRS program, which came into effect, the Whistleblower Reward Program came into effect around 2006. It is unique because it doesn't make the distinction between tax evasion and tax fraud. Any violation is sufficient for them. So I think that's a great leveler, right? So I think that's one piece. And I think the other piece with tax whistleblowers, probably true of many other areas, but I think particularly unique to tax is that because of all the inchoate and machinations that go on that Elaine and Charlie and Jonas have talked about, it really takes an insider to unpack all that. How do you as an external auditing function, how do you ever figure that out? Because it's by design, a lot of these frauds are difficult to penetrate. So I think that's unique. That's not necessarily unique to tax, but I think it's particularly applicable to tax, that folks like Charlie can see sort of what planning went into it. And I think that's something that's hard to detect from the outside.
And I would point out that in the case of the Big Four led tax planning, there is a lot of documentation that doesn't make it to the IRS. Right, a Big Four accounting firm pitches a tax idea, and it's a 20-page PowerPoint chart that says if we do this, we get this tax benefit. Then that turns into a 100-page PowerPoint chart that analyzes every single jurisdiction. You know, this is what this jurisdiction's law says. This is the tax consequence. This is what this jurisdiction's law says. This is the tax consequence. And then you have this very detailed. This is why it works technically at every single step of the way. The IRS never sees that. No taxing authority see that. What they see is the polished version, which says this is all being done for this business purpose, right? We want to increase we want to, we need a center of excellence for risk allocation. You know, whenever you see center of excellence and risk allocation, tax scheming is going on, right? You know, the transfer pricing is intended to transfer value to where there's low tax, and there's a race to the bottom with the advisors, right? If you're the PhD in economics who says yes, you know, when you transfer that business out of the country, nothing transferred, nothing of value transferred, then you get hired, right? It's a moral quandary. I mean, how do you make a living as a PhD economist if you're not willing to be creative?
You know, the focus here on the level of expertise behind the planning, just as a side matter, makes me, question how far we could ever get with different kinds of disclosures. And I didn't even mean sort of the standard ones, but, part of international tax is just a constant exploration more recently of how disclosure may address various kinds of problems. And at least to the issues we're getting at here, it seems highly implausible that we would ever have the kinds of disclosure that would allow outsiders really to ever see the kinds of activity that may help with other issues, but not with this. So I want to kind of turn a little bit now and think about designing whistleblowing programs. So what's going on? So Mary, you started a little bit down that path with, if you're going to entertain a whistleblowing complaint, right? Doesn't have to be fraud. It's just any violation. So certainly that's one dimension on which we might see the programs consider their design. What are some of the other features that are really important and maybe are varying across the country, and how are they playing out?
So I think in terms of whistleblower reward programs, there's sort of three features you need. And one, I'm pleased to say that Europe is way ahead of the United States on the idea of whistleblower protection against retaliation. And that's because in the United States, we're very siloed, right? So we've created a retaliation protection as a result of Enron, so SOX. Then in Dodd-Frank, because of the financial crisis, we're protecting whistleblowers, but there's no umbrella protection. So that is the first thing that's needed, right? And so I feel like particularly in the US, an umbrella would be helpful. The EU directive, of course, we've been alluding to, is going a long way, moving from, I think, something like 8 member states to now all 28. So you need to know as a whistleblower, you'll be protected if you come forward, or at least you'll have, but we all know that the protections, right, have to be brought and dealt with in court. And so one thing I would say is the EU directive has basically flipped the burden of proof. And so if you prima facie can show retaliation as a whistleblower, then the burden shifts to the employer to show that we fired you for some other reason. And that's exactly where it should be. So I think we're making strides there. So you need to have that. But what does a whistleblower want? Of course, they want to know that they're protected from their job, job discrimination. They want to be heard, and they want the regulatory authority to take action. And that's why I feel like the success of reward programs come in here, is that it empowers whistleblowers to bring information to the very person who can take action on it. And what I think is so great about the programs is that I think whistleblowing, a time of whistleblowing, Charlie knows this intimately, is a time of great extremis, right? You can imagine trying to make this decision at a time when you've been told, like, you need to bury those findings. So we have big, bold letters that say we have an office of the whistleblower inside the IRS to whom you can submit this special form, and in it goes. And you don't even need a lawyer to do it. So I think, obviously, I think lawyers bring value to it, but I think it's really vital that that is what we're doing. We're making it very clear. We're signposting, come to us under our program. Unfortunately, the IRS program until recently did not have a retaliation protection section. So we pushed and pushed and pushed, and finally we are in that position. But at the time, I suspect when Charlie's filing, there were no such protections. So you need to have retaliation protection. You need to be able to have rewards. But it's not just simple to have rewards. You actually need an authority with an appetite, because remember, rewards are a percentage of whatever fine is imposed. You need an authority that's actually going to be aggressive and prosecute. And so I don't think that's true for every country. I don't think rewards are a solution for every country, because the last thing we want to do, I think, is what we've seen and what I fear is going to happen with the EU whistleblowing directive, is that we're going to lure people out with a notice of these, okay, you have an internal compliance hotline now, you can speak, without them knowing sort of the risks that are there. I think the law is ahead of where the culture is. So I think that's the third thing I think you need to have is that appetite. I would say the IRS certainly has done well, and there's some astonishing figures. So between 2017, I think the program has brought in the totals $6.14 billion as a result of whistleblower actions from 2007 to 2020. 1.02 billion of that was paid to the whistleblowers as rewards. That's 16.5% of the recoveries. And so I would say that that's a tremendous investment for the IRS to get that information. But mostly I think the concern is that Charlie will tell you the awards process, the process is taking 10 years. The IRS's Office of the Whistleblower tells you we've got a 10-year period. So you can imagine me trying as a whistleblower lawyer, I have to be very frank with my clients saying, this it's not a short-term solution for you. This is more like a lottery ticket. So I know I've thrown out a lot there, but that's, I think those are sort of the earmarks of what I think make for a strong program.
If you're a whistleblower for the money, you're an idiot. I live in West Palm Beach. Across the water is Palm Beach. There's house after house after house after house that's 10 million, 20 million, 100 million, 0% whistleblowers, right? I mean, stay at the top of your company and you will get rich. It's a get rich slow scheme. The whistleblowing is not the path to wealth. It's the path to devastation. But people do want to tell the truth. and some do get rich. Sorry, Mary. There's one thing I wanted to say, and I think that to answer your question, there's one super factor, and that super factor is companies hiring whistleblowers fired by other companies, right? Once companies can be encouraged to hire whistleblowers fired by other companies, then the fear of whistleblowing is going to diminish dramatically. The anti-retaliation rules that say if you blow the whistle, then your employer has to keep you even though they don't want you, that's a horrible solution. You as the whistleblower don't want to keep working for this place that doesn't want you, and they don't want you, right? What has to happen is the companies have to hire whistleblowers fired by other people in the industry. And the only way to do that is with regulatory pressure. If you look at a company, say a company gets caught cheating, and you say, okay, well, we think that the fine should be $10 million. That'll discourage it. But then you say, okay, well, they've got 100,000 employees. How many of them were fired by as a whistleblower by another company? Oh, that's 0.000%. Oh, sorry. Well, in that case, the fine's 50 million, right? Because you might talk about not retaliating, but you are retaliating, right? You're choosing not to hire whistleblowers. There's unemployed whistleblowers out there that are qualified to do the jobs. So if you can encourage companies to hire whistleblowers fired elsewhere that are qualified for the job, there's no marginal cost to the institution. You're not creating a job of being a whistleblower. You're not creating a job in the compliance department. You're hiring a tax guy. You're hiring an accountant. You're hiring a truck driver, right? This person who's qualified to do that job. And that's going to be more effective than the compliance department, internal audit, external audit, all these incremental costs that you're incurring in order to keep the company honest. All you're doing is empowering people to do what they want to do in the first place, which is tell the truth. So that's
totally, Charlie. I would add two more things I realized from the list and hearing you talk, Charlie, is that the other sine qua non for a whistleblower program is allowing anonymous reporting. And so that is the gold standard in my estimation, and the SEC program and the IRS program, but the SEC program in particular is let out with the anonymous option. That's, of course, anonymity is only as good as the fact pattern that you bring, right? If you're one of two people and process of elimination, but in certain frauds where it could come from many sources, it is a very viable protection. And that's why I think much to people's frustration, when you look at the reward announcements that are being paid by the IRS, they'll never identify the whistleblower's name or the company that was reported on, and that's by design. The other piece I would say that where I do think the SEC is the gold standard, and I'd love to see the IRS replicate it and other programs, is that Charlie was talking about the role of NDAs. The SEC has been very aggressive imposing fines on companies, not for securities law violations, but for having severance agreements, confidentiality agreements that basically have a chilling effect, that are unenforceable and have provisions there that suggest you can't go to law enforcement. So I think that's the kind of stuff you need to see, and I need to be able to tell my clients, this government entity really cares about you and takes, remarkable steps to make sure that you're protected, and they want to hear from you. So I think that's another piece, is that to hear the regulator come out and impose the fines I think is vital to show that we won't tolerate the defense lawyers coming up with these, the latest way to try and, silence whistleblowers.
Maybe the one thing to add here, and I was surprised, Mary, that you said rewards might not be the solution everywhere, but I understand if it's conditional on a penalty or something. But in terms of academic research, I've actually done a study on, would it be sufficient if there's anti-retaliation provisions, if you can file anonymously? Because in theory, if those mechanisms work, additional financial incentives shouldn't matter. But it turns out, as soon as you give those financial incentives, people are more willing to come forward. They're more willing to share issues. Now, the big question is it just random noise? Are those all disgruntled employees that are filing something and play the lottery or something, maybe with the regulator? But in fact, it's the opposite. The additional tips that the authorities receive are actually of higher quality. So if anything, they seem to be pointing at more severe issues. So the other way how to frame it would be, if you think about a reward more like an insurance for the cost that you incur, it is maybe at the end of the day the only insurance that actually works. And it works in the sense that it incentivizes you to only file something that has merit, because if there's no merit, you won't get the reward. And all the other stuff, yeah, in theory, no one should be able to identify who you are, but as you pointed out, in many situations, I think companies can figure it out pretty quickly.
I would ask, sorry, John.
I would ask the question to the company: if you have 100,000 employees and you've never hired a whistleblower, why not? Right? Is it because you can't find them? Is it because you want to preserve the option to commit fraud in the future? Right? I mean, neither one of those are credible answers.
I think as well, though, I think you alluded to it earlier, Charles, like, in some ways, if you have strong whistleblowing legislation with high incentives and so on, I mean, the optimal result is you'll never need them because companies will actually become honest because there's too much of an incentive for somebody to whistleblow if they're not. So it's a self-fulfilling, I suppose, prophecy that the best result is that you don't end up with whistleblowing or giving out incentives because you don't need to anymore.
Is judo. It's using capitalism against capitalism's flaws, right? I mean, capitalism has flaws. People can be excessively greedy. So find somebody who's greedy and preferably good looking and charming, who can go and make them pay, right? That'll fix the system. You need checks and balances.
Jonas, I want to actually come back to something. I know that you had some thoughts before that you had mentioned about sort of the role of the regulatory authorities themselves in running the whistleblowing programs, maybe how they're selecting particular tips. And so I just wanted to get your perspective on how that fits into this.
Yeah, so that gets, we're back to the gatekeepers here. So what I actually did, and I also posted that study here in the chat for everyone, is again under this False Claims Act, which maybe it's not so nice for the whistleblower, but it's really nice for academics, is you can actually identify who was the whistleblower and what really happened to the cases. So did the Department of Justice pick up on that case, or did they let the whistleblower do it on their own or even drop the case? And so the nice thing is you can collect all of those cases and see which are the cases that the DOJ is more likely to investigate and bring all the way to the settlement, and which ones is it more likely to ignore. And something that's maybe a little bit less well understood is the Department of Justice is like a profit center for the US government. So they want to get the money, they want to collect a lot of money, and those people who are in the DOJ, they also have career incentives like all of us do. And so the two key performance metrics that the DOJ has, win a lot of cases and collect a lot of money. And so basically, in short, maybe not a big surprise, but that is then also reflected in the types of cases that the Department of Justice is more likely to select. So they're more likely to go after easier to win cases and maybe companies that have deep pockets. And that is what I show. And so now the question is, okay, so what? Because the nice thing under this False Claims Act thing is the whistleblower, together with Mary and colleagues, can go on their own, so can just pursue the case on their own. But the problem is the likelihood of settlement or like monetary rewards is much, much lower. And in turn, maybe also not a surprise, but the company is also much more likely to make changes to its internal compliance and control systems, so essentially to mitigate future fraud, if the case was brought in conjunction with the DOJ. So it has huge implications for this whole environment. And at the end of the day, of course, and Charles was referring to that earlier, the regulators, they play a key role here, a key gatekeeper role in their behavior. At the end of the day, trickles down within the whole system. It affects the cases that Mary will select to bring to them, and it affects the whistleblowers in whether or not they're actually willing to share the cases and bring the cases to the regulators.
I think another thing that the data shows very clearly, I don't know if your research goes into this, but before the False Claims Act permitted plaintiffs to go alone without the DOJ published the numbers on how much they collected for people fraudulently defrauding the government, right? And the numbers were small. They were $300 and $400 million a year. Now they're $3 billion a year. So this sort of public-private partnership works very well. And I think that's one of the reasons why the Irs Whistleblower Program is so ineffective. I mean, notwithstanding the nice things that Mary said about it, it collecting $6 billion over 13 years when the tax gap is $450 billion every single year, right? What's the percentage? I can't do the math in my head, but I know it's way south of 1%, right? And 0.01%, right? It's abysmal, right? Now, if we had, like New York State has, a False Claims Act that allowed plaintiffs to go after taxpayers who've cheated the government, they would drag the IRS along with them, right? If the plaintiffs could have the discovery and they could prove it, the IRS isn't going to sit there and go, well, go alone. They're going to join the good cases. As you said, they're going to select the best ones. And so this sort of public-private partnership has proven to work in the False Claims Act, and it should be adopted elsewhere. And I would argue in other jurisdictions as well, right? I mean, Europe has especially the UK has a strong aversion to reward programs, but they work.
Maybe one mini comment on this is, so yeah, I fully agree. It's actually, if you think about this, it's very efficient. You're saving public resources, taxpayers' money, because you're kind of leveraging that there are people like Mary who then take on and incur all of this cost and do part of the investigation for you. So I think it's a great idea, and it typically seems to be working well.
I would underscore Charlie's point on that, Jonas's research deals with the False Claims Act, and the False Claims Act, most False Claims Act federal, and there's 30 states that have them, and actually 8 municipalities that have them. Most of them exclude tax frauds. And New York really led the way by having one of the first, New York, they amended their False Claims Act to allow there to be to get after violation of tax obligations created by the state of New York. But Illinois has followed suit in a smaller sliver. And then the District of Columbia just this, probably 3 months ago, passed a law, and we're starting to see more states seeing this, that they're seeing this as a big hole in their enforcement, that these whistleblowers are helping them in healthcare fraud and all these other areas, procurement fraud. Why aren't they helping them with tax fraud? So I think that may be the next frontier. I hope it is. We've been pushing the state of California to do something similar, but we haven't been successful.
As we're talking, and I was thinking about the public, private sort of path, but I also, come back to sort of Elaine's point a little bit earlier about the spectrum in tax, from sort of the very clever planning and the clever planning where you really push the boundaries. And then at some end, you've actually made things up, right? That's just easier to deal with. But that, some very important cases and a lot of tax dollars reside sort of in the middle, where it's pretty much, it's wrong, but proving it in court on a predictable basis is not always easy. And the IRS has trouble with that. And so that works two ways. I worry about the whistleblower being able to really get those cases either successfully prosecuted, and also whether or not those are, the service is going to be willing to take them up. They're hard enough as it is that the whistleblower case they're going to grab? And it's not an easy solution for that, but it does sort of, again, suggest, part to Charlie's point, there's a lot going on, but some of those are maybe hard cases.
Well, the whistleblower has the smoking gun document. That's the whole point.
Well, sometimes if it's a true document of that type, that's fantastic. But sometimes it's a totality, and the truth sort of is there. It's just not, there's a famous U.S. tax case with literally a letter from, I think it's almost the president, saying, yes, this is fantastic. Let's abuse transfer pricing with Switzerland in the 50s. Well, I mean, we all dream of that letter, but there's a lot of good cases without that letter, and those are the ones I worry about. But it is now time. I'm going to have to bring our roundtable portion to a close. We could go on, but at least we have Q&A. So at this point, I'm going to ask that the recording be turned off and close. So our recording is back on. Excellent. And now I'd like to introduce, let's get my page here. So we're going to have our closing remarks. And there he is, Stephen Holden. So we are delighted to have you. And I was just looking for there we go. So postgraduate researcher at the Center for Financial and Corporate Integrity at Coventry University. There's a lot going on today, Stephen, so magically I turn it over to you to tie it all in a bow for us.
Thank you very much. I hope your expectations aren't too great, or if they are, please measure them. If no one could disclose externally if something goes wrong, I'd really appreciate that in theme with the discussion. So as alluded to, my name is Stephen Holden. I'm a postgraduate researcher at the CFCI and Coventry University. I'm undertaking a PhD with a primary focus on the phenomenon of whistleblowing. So to me personally, this was an extremely fascinating and fruitful discussion. And I'd like to thank you all for just engaging so well, being so interesting from the various perspectives and disciplines and the lived experiences that have contributed to this discussion. I think, interestingly, broadly, the consensus is focused not only on the importance of the subject and topic of whistleblowing, but also the agreement that whistleblowing is a phenomenon gaining in increasing prominence with a contemporary discourse around the fields of governance, accountability, and increasing transparency. I think reflective of the VIRTEU topic, many of the perspectives that have been discussed today have been focused on the area of taxation and the central role whistleblowers can play in detecting and identifying tax fraud, but also the important deterrent effect that the risk of whistleblowing has on those who may consider committing tax avoidance or tax evasion. Charles Middleton, through his lived experiences as a whistleblower, was able to provide a greater context to the deliberations and processes that whistleblowers engage with when making decisions if to disclose or not. Charles provided a reflection on the sophisticated dishonesty within complex organizations and the role that whistleblowers play in uncovering fraud and criminality. As such, these individuals expose themselves to instances of significant retaliation, often disguised a number of weeks later as problems that suddenly materialize within their job role that were otherwise not apparent before that case. Saliently, fraud is a problem and whistleblowing is the solution. So this raises the question of how do we get whistleblowers to talk and how do we make them come forward? And from personal experience, Charles reflected that it is a lonely process and it is a difficult process. Simply, there's no easy answer but to encourage whistleblowers through various aspects of society and a changing of society's understandings. It may be argued that the detection and identification of fraud and financial impropriety is the role of auditors. However, large corporations have become so complex and interlaced that masking fraud has become increasingly easier, and therefore the reliance on whistleblowers has grown. Yet, reflective of this regulatory failure, we expect the disclosing parties to make such significant risks in pursuing societal goods and pro-social behaviours, reflective of whistleblowing being one of society's primary means of detection within an organisation. And therefore, in order to encourage individuals to blow the whistle, it was suggested that rewards are offered to whistleblowers and that this encouragement will help to overcome that fear the disclosing parties have in coming forward or the impact in retaliation. And in turn, this will act as a greater deterrent to corporations engaging in wrongdoing and reduce the cost risk benefit that organizations seek when considering should they engage in wrongdoing in the first place. Following that, the discussion was broadly split into two areas. Those of formal gatekeeping and those focused saliently on whistleblowing. Firstly, we focused on the role of gatekeeping. And drawing upon her groundings in tax expertise, Dr. Elaine Doyle established the focus of the requirement for more research in tax practitioners, and as such, external advisors who advise corporations as means and methods to evade tax and means through which to avoid detection. The gatekeeper, there to require regulatory compliance and secure tax compliance, is both internal to the organization and external, for instance, auditors. But there are also tax authorities with responsibility to ensure these organizations are compliant. And these problems come, however, through the use of these same professional advisors working within internal tax systems. Yet they are not employees of the organization, but they do have responsibilities to the organization. Adding to this, Mary provided a role of the Big Four auditing firms and contextualized it against that, with the unhealthy relationships they have within the between these companies, becoming more of jovial and friendly rather than a critical friend or somebody analyzing a problem within the organizations. Increasingly, this may be understood as the role of the auditor removed somewhat from their responsibility towards shareholders and assuring shareholders, but more one of earning money simply from an ongoing relationship with the organization. Professor Jonas has contextualized this with an understanding of whistleblower reporting, noting that typically this is internal. However, it's often focused with retaliation, or often followed up, with retaliation, as previously identified. So the question is, how can we better protect whistleblowers? A study of over 2,000 lawsuits demonstrated that those who lost their job were unemployed for a year afterwards, and those who did not lose their job would typically have their income reduced by 10% or more for a number of years. And as such, bounty programs and therefore rewards are instead maybe seen as compensation for the risk taken instead of a reward for doing the right thing. In reality, the amount claimed is significantly less than press or critics may have you believe. This was followed by a broad question and discussion regarding the obligations of professionals and their ethical standards or responsibilities. And how do we enforce these competing duties to encourage these tax professionals or lawyers to report criminality? Charles helped provide an understanding and the differentiation between a gatekeeper and an accomplice. And this involves a lot of focus on the revolving door relationships between the various parties, including the regulators who frequently come from industry and then later go back to industry, exasperating the problem. And and with regards, by contract, whistleblowers are the last line of defense. So what does whistleblowing look like in the context of tax as opposed to other fields? Dr. Elaine Doyle considered that it is related to these understandings of illegality and the differentiation between avoidance and evasion. And at what point do we take action on wrong and immoral behavior that is not actually illegal behavior? And what is the best way to encourage a whistleblower with knowledge and intimate relationship with immoral and wrongdoing within an organization, but not necessarily illegal conduct? And especially when we look at that within the realm of the inherent risks that whistleblowers face. Merriman considers the differentiation between tax whistleblowers and others within the role of the IRS in the US system, and how they do not necessarily differentiate between evasion and avoidance, and it simply needs to be a breach of standards. However, tax fraud is significantly harder to detect and is complex by design in order directly to avoid this accountability and this clarity. Charles contributed to contextualize that between industry standards and the expectation of individuals hired to be creative in order to fulfill these roles, therefore creating essentially an innovative wrongdoing and a constant evolution of wrongdoing to constantly outpace the scope of regulation or the scope of internal or external reporting requirements. The discussion then moved to features of internal and international whistleblowing programs. Mary was able to add perspectives drawn from her experiences with practices that reflected the nature of whistleblowing as an appropriate tool to uncover VAT fraud, and was able to contextualize these discussions around contrasting whistleblowing systems, including those which provide financial incentives to make disclosures. And this was further done with reference to the EU directive, providing umbrella protections enforceable in court, which creates a very interesting reverse burden of proof on the employer to prove that there was no retaliation, as opposed to the person bringing the claim to prove the existence of retaliation. When combined with clear and effective whistleblowing channels, for instance, through the IRS, this may provide, and the inclusion and providing of rewards, this may enable a greater incentive tipping that scale for whistleblowers. Yet there also needs to be demonstrated effective means and evidence of prosecution following the disclosures being made. And from a financial perspective, the IRS has been able to recover significantly more of otherwise lost revenue than they have paid in rewards. And therefore it simply makes economic sense to implement these policies. Additionally, these regulatory features help to thaw gagging provisions within contracts, which I think is extremely, an important role. Professor Heese elaborated on from the point of studies, showing the idea of these rewards in providing incentives for disclosures, in so much as that they are an insurance should retaliation occur, and encourages individuals to only bring claims with merit, reflective of the fact that the claim must be authentic in order to be able to claim the reward in the first place. Baseless claims simply are not paid for. And this point was expanded on by Dr. Doyle, on which he said providing of significant bounties for effective rewarding. In the short term, we'll see quite a lot of rewards, but in the long term, through this large reward deterrent, we'll see the wrongdoing be just come down overall, since it's simply not worth the company's cost. And as a final point, Dr. Heese provided perspectives on the role of the regulatory authorities, including the Department of Justice, and how they're able to select whistleblower tips for enforcement, and the consequences in terms of prevention or encouragement of future whistleblowers. The DOJ are more likely to go after those easy to win cases and go after companies with deep pockets, while individuals can attempt to highlight issues alone. Without the support of the DOJ or other regulators, corporations are more reluctant and less willing to change internal systems and processes, and therefore they are less likely to address the systematic problem that led to whistleblowers making that disclosure in the first place. I'm sorry that was quite a long summing up, but it was quite a dynamic discussion that went quite a long way. So again, I'd like to thank everybody, because personally I found that very entertaining and extremely fruitful. So thank you very much, everybody.
Well, thank you, Stephen. You did indeed meet all of our expectations. I had no doubt.
I think you're possibly still on mute.
I think now, can you hear? Great. All right.
Never
So
mind, my speaker turned itself off.
I will just repeat my thank you for Stephen, that he did in fact meet all our expectations. And I would like to thank all of our participants in the roundtable and the attendees who've joined us here today. If you found this as interesting as I think we all did, I hope that you'll join us again in 2 weeks on Friday, March 12th for the 4th and final roundtable in the VIRTEU series. So we look forward to seeing you then. Thank you, everyone.